Here's the outline for today's seminar. A little bit about me, why I do what I do, followed by what you are here for, the New York City market update. I have so many interesting charts to share with you. We will then be diving into the impact of the Amazon news upon Long Island City, followed by a moment about the Google news and Hudson Square. Then we will transition to the recent news about the 24/7 shutdown of the L train being halted. Finally, I'll have a few closing words. All right, so to get us started, a little bit about me. I am a licensed associate real estate broker with Warburg Realty. I've closed over 300 transactions throughout my time in real estate sales and rentals over the past 8 years. I have a BA from the University of Wisconsin and an MBA from Emory University. So why I do what I do? I think it's very important to understand me and where I come from. I love to work with people and help them. As I say, real estate is the ultimate people business. I also have a passion for data and markets. My background in financial services provides information at a higher level of expertise and really comes across to my clients because I love data. I'll be sharing with you so much data today about the current market. To start, the New York City market is divided into 5 boroughs. Then, of course, you have New Jersey, which includes Hoboken and Jersey City. For today's seminar, I'll be discussing Manhattan, Western and Northern Brooklyn, and in Queens, Long Island City with the Amazon news. So now it's time to get into the gist of why you're here. The New York City real estate market overview. So right now, we are seeing a really high supply of inventory, which is supply on the market. The amount of inventory on the market has skyrocketed over the past year to 18 months. We are seeing lower demand to purchase than in past years. With much higher supply and lower demand, we have seen a shift in the supply-demand curve, which means that prices have come down. It is really a buyer's market in pretty much every price point and neighborhood. We are seeing a 10 to 20% decline in pricing from the recent highs. In 2018, we saw a 10% decline in pricing. The new development market is getting even hit harder than resale. We're seeing around a 20% decline from the high in the new dev market. Based upon all of these factors on this slide, there's been a total reset in the market regarding pricing. So, as just mentioned, inventory is way up. The calendar year of 2018 saw approximately a 19% increase in supply of listings on the market. In addition, average days on the market increased by 30%, and the amount of contracts signed, which is the best measurement of demand, decreased by 7.4%. So what does all this mean? It shows that it's a very hard environment for sellers and that the pendulum has swung entirely to buyers, creating a buyer's market for purchasing. This is a quote from Warren Buffett, one of my favorite quotes that basically Warren Buffett loves to buy when merchandise is marked down. That's what you can say right now as we're getting into that 10 to 20% markdown as far as pricing. And yes, that's a photo of me meeting Warren Buffett a little over 10 years ago in Omaha. Let's move on to what's happened that has created this change in the market. In the condo market, what we have seen is that money has stopped flowing in from overseas, such as China, Russia, the Middle East, Europe. In the co-op market, the December 2017 tax bill was a major trigger that started this major decline in the market as far as pricing. The tax bill put a 10,000 cap on state and local tax deductions. In addition, it capped the maximum amount that you could write off as far as the mortgage interest at $750,000. An additional reason for the sudden change in market conditions is that these are very emotional times given the U.S. political situation. We have also seen a rising interest rate environment, though rates have recently started to decline. Here is an example of the impact of a rate increases for buyer. In late 2016, rates were around 4%, and in late 2018, rates increased to about 5%. This chart shows that even a 1% increase in rates can have a big effect upon someone's mortgage payments. For example, let's say you want a $1.25 million apartment, and you're going to have a down payment of 20%, which will result in a loan for $1 million. The 1% increase in rates will leave you with about a $600 per month increase in your interest payments, which will add up to be about $7,000 per year. The increasing rate environment does have a negative effect upon demand and places downward pressure on pricing. Another way I'm able to share with you how this has become a buyer's market is by showing the amount of listings that get sold over the listing price. In the fourth quarter of 2018, we actually hit under 8% for the amount of listings that were sold over the asking price, which is a low we haven't seen since the end of 2012. In 2013, 14, and 2015, bidding wars were very common, and it was a seller's market with very low inventory. It was the complete opposite market than what we are seeing today. In the fourth quarter of 2018, the median price fell below $1 million for the first time in over 3 years. This is another way of showing the declining market in sold comps. Moving on, this next chart from the fall of 2018 really shows the current environment for apartment sellers, as every day we are witnessing a massive amount of price cuts on the market. The amount of price cuts in the week after Labor Day last year was the highest we have ever seen, including the last recession in 2008 to 2009. So certainly it's a tough time for sellers, as you saw in my previous chart, with all these price cuts. This chart shows you how the longer an apartment remains on the market, the tougher it is for sellers as buyers pick up more leverage in negotiating. That's why my warning to sellers is that you have to really pinpoint pricing at the beginning, which means only using comps from the last few months, since the market environment has shifted that dramatically. If your apartment lingers on the market, you'll be looking at an average sale 10% less than the asking price at over 120 days on the market. This is really an important point for sellers, is that the longer the apartment remains on the market, the more power buyers will have, and they'll come in with really low offers. That's why you must price right from the beginning and be skeptical of any agent who does not provide you with recent comps. Let's transition now to some neighborhood data about why this is such a great time to buy real estate. This chart measures supply, amount of inventory in the market versus demand, contracts that were signed in September and October of last year. The reason why I'm still using these numbers from the fall is that the fall and spring markets are really the best indication of the market. And in New York City, during the holiday season, many people take off their apartments off the market. As such, there's less inventory on the market than during the peak fall and spring selling seasons. There's a lot of staggering data on this chart and shows you how buyers have maximum leverage in these neighborhoods and price points, with supply being so high and demand so low. I cannot imagine any better buying conditions for a buyer in these neighborhoods. We are now going to specifically address this $1 million and under price range. This price range has heavily been impacted by the December 27 tax bill and the increasing rate environment, as this budget adapts more to the entry-level buyer, which tends to be the first home buyer. This open house attendance chart shows that listings within this budget had much less demand this past fall when compared to pre-tax bill in the fall of 2017. So we're seeing much weakness in the co-op and condo markets less than $1 million. Starting off with co-ops, this chart shows you how it's been a complete reversal of market conditions in Manhattan. In only a few years, as inventory for October 2018 has almost doubled and is up 92% from 3 years earlier. Contracts signed in the fall of 2018 was down slightly from previous years, but is nowhere close to keeping up with the increasing amount of supply in the market. The pendulum has swung entirely 180 degrees from a couple of years ago, where we saw bidding wars all the time in this price range. Similarly, in the 1 million and under condo market, we are seeing more supply, but not as big of a percentage increase in supply when compared to that 1 million and under co-op market. However, what we have seen is a 45% dip in demand for this past October compared to October of 2015. Let's now transition to discussing the new developments market. As mentioned at the beginning of today's presentation, we're seeing about a 20% dip in pricing for new developments. New developments is now offering great incentives. For example, Expo Group, a very well-known real estate developer, is offering to pay for 5 years of common charges to purchasers. It's more common in this market for also the developer to now pay seller transfer taxes and seller attorney fees, which traditionally have been paid by the buyer. So which neighborhoods are going to see the largest amount of new developments? There's a lot in a pipeline coming to northern Brooklyn, which consists of Greenpoint and Williamsburg, plus the Long Island City, Astoria area of Queens. Hudson Yards is really the major new project in Manhattan that is being built by Related, a very well-known developer. It is such a large project that Hudson Yards is its own neighborhood. So tie up all this data that I've showed you. It's a buyer's market at every price point. On any given Sunday, we are seeing 15 to 20% of open houses have no one show up. Buyers have maximum leverage in this market and negotiating power. It is a perfect storm for buyers to find value in purchasing. As I say, every neighborhood apartment size has its own story. Let's now move on to discussing the recent Amazon news of Amazon opening up its second headquarters in Long Island City. The circle on this chart represents the proposed Amazon location. You'll see it's just a little north of the central district for Long Island City, where you have all the high-rises along the East River that separate the borough of Queens from Manhattan. The ferry service to Manhattan is just a few blocks south of the proposed location. This map location shows the Amazon location parallels with East 45th, 46th Street in Manhattan, and with the ferry service to Manhattan just to the south of the proposed location. Neighborhoods such as Murray Hill and Midtown East in Manhattan will benefit. This Amazon news is so big as it represents potentially 25,000 new employees coming to the area, with an average pay of $150,000. That's a huge amount of individuals who have a means to purchase or rent an apartment in the neighborhood. As a result of this news, we have seen open house attendance increase from about 2 to 3 attendees per Amazon news to an average of double-digit attendees in the first few weeks after this announcement. As a result of this increased demand, we have seen pricing increase by about 5% since this news came out in early November. We have seen many listings increase their pricing in Long Island City as a result of this news, which isn't surprising given the increased demand. This chart also lists some of the other neighborhoods that can benefit in the years ahead as they tap into these Amazon employees. So now here is the other exciting news. Google recently announced that they will be moving into this new space in Hudson Square, which is also known as West Soho. About 7,000 new employees will move into this space. Similar to Long Island City, this will increase the pool of buyers and renters in nearby neighborhoods on the western side of Manhattan, such as the West Village, Midtown West, Chelsea, and the Upper West Side. as these locations will be very accessible via subway. Other recent news that came out: Governor Cuomo halting the 24/7 L train subway shutdown. This was in the works for a couple of years and was supposed to start this coming April. This supposed halting had a major effect upon northern Brooklyn pricing for apartments and rentals. Williamsburg is a neighborhood that suffered the largest decreases in pricing as a result of this looming shutdown. So many homeowners and renters moved out of Williamsburg and even changed jobs as a result of this change to the subway. Williamsburg represents the first few stops on the L train into Brooklyn. Without the L train, it would have been very difficult to get into Manhattan from Williamsburg and northern Brooklyn. This is my quote in Brook Underground, where I mentioned that at the very least, there's going to be a lot more demand with the halting of the 24/7 L subway train shutdown in Williamsburg. It's hard to imagine pricing getting any lower in Williamsburg. I wanted to bring this chart to your attention. Here's a chart of the average Manhattan sales price compared to the Dow Jones Industrial Average. You'll see that from 2000 until the middle of last year, the average Manhattan sales price has increased by more than the Dow Jones Industrial Average. So even though we have down years in real estate in Manhattan, the future of real estate locally is still very bright. There's still a finite supply of apartments, and demand will come back. The tax bill, the mortgage deduction, everything that has changed recently can one day be changed back. So certainly the future for owning real estate in Manhattan is still very bright. To switch gears, there's three major aspects of my business and how I can help you. I help buyers to find an ideal property. Anything from negotiating to positioning the offer and doing comps analysis, so you know where to bid and if the property is a good buy. I also have access to very well qualified professionals, attorneys, contractors, and architects. I also help homeowners to sell their property so I can define and execute a strategy for sale. I do a free market evaluation for any homeowner of New York City real estate. Last, I also help homeowners and multifamily landlords to rent out their apartments. This is my blog, homebuyingnewyorkcity.com. Please check it out. I post many great articles on it, including my quarterly and seasonal market reports, plus other posts which are beneficial to anyone who wants to buy a home. Please connect with me on social media. This is my Twitter handle and how to find me on LinkedIn. I want to thank you for attending today's real estate market update for January 2019. Here's my info, so please reach out with any questions about buying or selling an apartment in New York City. It would be my pleasure to help you. Thank you again for attending today's webinar, the 2019 January market update. Thank you so much. Goodbye.